let's move straight on to the future of payment technology. And can I welcome our guests, our panel, onto the stage. Mike O'Keefe, Senior Vice President of Business Development at Corlytics Solutions, and Kirk Donahoe from Mangopay, Gabriel LaRue from Primer. Gentlemen all, thank you for joining us. Really welcome on stage. So, yeah, we're going to talk about the future of payment technology. So I've got an obvious question to ask to kick it off. What is the future of payment technology? What do you see coming along the pipeline? Gabriel, perhaps, first of all.
First of all, thanks so much for having me on the panel. So I think, for us and for me, I think the future of payment is essentially this notion of unbundling, right? What we've seen for many years is this notion that merchant would use like a full stack provider. But what's actually been happening over the last I would say 5 to 7 years is this notion that merchant want to use the best services across the payment stack, right? This notion that you're going to use one single provider or PSP for everything is simply not really happening, especially when you're looking at large enterprises. They want to use the best PSPs for their geographies. They want to use a specialized fraud provider. They may want to use specialized payout vendors. They may want to use tax management systems. So there's this notion of flexibility and optionality, and obviously that brings a lot of challenges, right? How you make sure that you can connect all these services cohesively, how you make these services interoperable. I mean, they're all living in a silo. If you sort of look at how you would integrate them. So this notion now that a merchant would use one single payment service provider for everything is simply not the case. And I think if you go and ask any decently large organization, mid-market, large enterprise, they will all tell you the same thing. Now we want to take back control of our payments. We want to make sure that we use the best services across the payment lifecycle. And as we're going through that motion, we need to integrate many different services.
Can I just double check? I mean, you're bound to make that point because that's what Primer does. But are you actually seeing that?
Yeah, well,
within your clients and across the
So Primer is a 5-year-old company. Prior to that, I was at PayPal for about 5 years in the UK, Europe, and then in the US. And so that's something that we see. Right now we work with large enterprises, the largest OTA in the UK, New Look, for example, in fashion, Get Your Guide in Germany. We work with very large enterprises. And they're all going through the same motion, right? And so that's very much a reality. I think, back in the days, the payment service provider had this vision of being the one-stop shop for everything. But if we just ask ourselves a very simple question, do we think that a PSP is going to be the best fraud provider? I don't think so, right? I mean, it's very difficult to optimize for fraud. Do we think that a PSP will do open banking the same way as an open banking provider will do open banking? Probably not, right? So how you make sure that you can allow these merchants to use all these services? That's the question that we should ask ourselves, and that's for me the future of payments: optionality, flexibility. But obviously, you need a unified infrastructure to do that, which is what we saw.
I mean, and I can speak as well. I don't know if you know, but myself and Gabriel used to be good competitors of each other. So I threw in the towel a little bit earlier than he did with Primer, and Primer enjoying amazing success from this. But I can give a balanced point of view on this. I've seen through Mangopay, we provide that ledger and payout infrastructure. I've seen as we meet merchants of that larger size, they want to have an optionality on the front side, right? And it's driven obviously by cost. Cost is a major thing. How do I get two partners competing against each other? But it's also driven by quality of service. No one payment provider in one single market is equal. There's nuances there, right? So it's really interesting to see that change. What do you think, if you don't mind me asking, Gabriel, what do you think is driving that beyond those hard things? Do you think there's a change in the professionalism of the payments leader who's willing to embrace this stuff?
I think the merchant are getting a lot more educated, right? Yeah. Obviously, now you have the rise of large payments team, and you see companies investing into payments leader. But you also have merchant being a lot more educated. They actually start to understand okay, how can you actually leverage payments? For many, many years, payment was just that sort of thing that lives at the end of the purchasing funnel, right? It needs to work. That was pretty much what has been happening over the last couple of years. And then I think businesses out there start realizing, wait a minute, I can drive so much with payments. I can drive so much value with payments. If you think about it now, I use a a pretty terrible analogy, but I'll still use it today. Like, imagine you put like a device tracker on a payments. Like, let's say you put an AirTag, and you see like where is that payment going through an organization. It will touch like many different teams and departments. Payments will be consumed by the payments team, the fraud team, the data team, the finance team, the support team, eventually marketing at some point. They all now like looking to leverage payments. Payments should be a growth driver, and not just like something that works that we're scared to touch. No mic. Mike? Yes, good. So it's a function of education and pretty much like the market is a lot
Next
more educated
generation
now.
of leaders coming through. Yeah.
Mike, Corlytics, you help companies navigate the minefield of the regulatory world. From your perspective, does regulation help innovate, or does it hinder? Does it depend on the market, or?
Yeah, I think it very much depends on the market. So at Corlytics, we provide reg change products to help payment service providers to understand, what the landscape is in respect to the jurisdictions in which they operate. So clearly, depending on the jurisdiction in which you operate, you've got, a widespread set of regulations with which you need to comply. So if you look at Europe, maybe even the UK, with the advent of PSD2, you're seeing regulation that's trying to help the entire industry to innovate, which is positive. And then think if you look at other markets, so for example in the US, if you want to operate in the US, there are 50 states, you need to comply with regulations across 50 states. There's approximately 300 different regulations that you need to comply with just in the US alone, and that's just at a state level. And then you bring into account all of the different federal laws that you need to comply with. What that actually means for most organizations who want to expand into that market is how do they actually think about how they begin to comply with these laws and regulations, and it's clearly extremely difficult. And for most firms, they need to take a risk-based view of that. So what's going to help me to actually make sure that I'm not going to be fined by the regulator, and then also make sure that I can evidence my compliance with the various laws and regulations. So from my perspective, when we look at the types of organizations that we service today, the biggest part of the headache from a compliance perspective is evidencing to the regulator that they've complied. Clearly, fraud and AML are pretty well covered, but there are massive amounts of additional issues. So, I'm thinking about, there was a firm fined earlier this year in the US for consumer practices, so not advising people of the specific fees that were associated with processing their payments. Massive fine, $44 million, which is huge for a payment service provider to have to shell out. Maybe not on the same scale as some of the banks, but still a massive amount of money. So from my perspective, that the innovations that I see around payments technology is how can we help organizations to strike that balance between making sure that they can expand their businesses into new jurisdictions, but also staying compliant with the regulations.
So on the one hand, perhaps if we unfairly perhaps look at the American model, where correct me if I'm wrong, it feels more like a burden than regulation for innovation. On the one hand, you have innovation driven by fear, by not wanting to be fined huge amounts of money. But the European UK model has been about facilitating innovation, hasn't it?
I think it has more so recently, but I think there's some historical context to what's happened in the US, right? And we've seen massive flows of money between the US and other countries associated with organised crime. So, there's been a very draconian set of regulations put in place to stop those flows of illicit funds. And I think that's still a massive concern for most of the organisations that we deal with. That's in place today, all working relatively well, but it is a huge burden on each firm that wants to operate in the States, right? It's just a massive overhead that they need to put into their cost projections and so on. So it's hugely difficult.
Without giving any games away, are there any big game changers coming up that you are aware of or that we can talk about?
I think you're going to start to see this greater friction between the desire of merchants wanting this frictionless commerce piece and how the regulator wants to see things conducted. And we see this quite a bit. And many of you may have heard or even encountered delegated authentication at checkout. This idea, if you've encountered Stripe, you've seen you hit a Stripe hosted web page checkout and you're asked to submit a 6-digit code to go through checkout, opposed to going through one of the core mandates that was driven through PSD2, which is issuer bank communication and authenticating with your bank. So we're going to start seeing more and more of that prevail. But then you've got this balancing act between the regulator not quite understanding where this is coming from and why it's coming this way, because they're not deeply ingrained and,
They're not in sync.
They're not in sync with where the industry wants to go. Equally protective measures, one would argue probably even more protective, because it understands the user who's checking out, has all these vectors it's pulling at and identifying the profile of this user, really, really intelligent stuff. But they're saying, well, this doesn't really conform with what we believe should be the protection mechanism. So I think, there's a desire for this frictionless commerce piece, but then there's that conflict still of, well, we've put down something in legislation, regulation, it's been transposed at national levels, this is what we believe it should be, but that was 3 or 4 years ago. So you're always going to get this conflict of trying to keep up with what should be done,
Yeah, I totally agree with that. And I mean, that's where, even when you're talking about the payment stack, there are other parts of the organization that you can optimize as well. So trying to optimize and automate as much of that reg compliance for organizations so that they can get on with doing what they're good at, right? Yep. You don't want to be caught up in that minefield of regulation on an ongoing basis.
Gabriel, are you seeing any big game-changing technological advances or products coming forward?
With regards to when you're looking at regulation specifically, I think
across the field.
If we just take a step back on regulation, so you had PSD2 that was like a pretty, it was very challenging, right, for merchants, right? And especially if you go back to this first notion of optionality and flexibility, right? All the vendors out there looked at PSD2 in different ways, and not all of them are ready at the same time. So imagine the moment you sort of unbundling your stack and use many services, how do you ensure that you're going to meet the regulation as well, right? We also think that regulation should be an opportunity, right? Not just a burden, right? So that's essentially how we're trying to solve things at Primer. PSD3 will come into play at some point. There's going to be even more regulation happening on SC and 3D Secure, specifically to further improve the user experience, right? So that's obviously going to put some more burden on the merchant, but again, for the benefit of the user. And I think in the context of our marketplace and platform, there's going to be less ability for platform to have exemption as well, right? That's where you're going to have to think of, okay, how can I solve that? Can I be licensed? Can I not? How can I actually navigate this whole thing, right? So, that's essentially the way I would look at regulation and what's going to be sort of difficult for merchants to navigate, but we as platform are here to help.
I think what comes with optionality is and the desire for flexibility is complexity, right? The more flexible you make something, the more you need to be a little bit more intelligent behind the scenes as to what the consumer is doing, understanding the movement through platforms, through marketplaces, how they're interacting with commerce, and just to try to protect that friction piece, just adopt more technology. So we see a big movement towards. It sounds so cliche to say, but we see AI really contributing in meaningful ways. We've got an AI fraud intelligence platform inside of Mangopay. We bought it 2 years ago, and that has really helped to apply just smart, rules-based, but also intelligent-based logic as to what we want to understand about our customer and their platform that they're interacting with, but actually what exemptions we can apply to allow them to continue their journey, because we already understand what they're trying to do, right? And so there's things to do on that side that we feel could lower the friction, but also increase the experience, just from a behind-the-scenes perspective.
And I think we're going to see more and more of that with regulation. I mean, fraud and AML have been around for 25 plus years as a mandated part of any financial services organization. I think the more we see the advent of AI and analytics specifically, the more frictionless you can actually make the regulatory burden also, and begin to understand, well, what are the obligations that I actually need to comply with, and which are the ones that I can gain exemptions from based upon the business, based upon the jurisdictions in which I operate.
It's so funny you say that, because we literally provide the payments infrastructure for marketplaces, the underlying ledger, the payout infrastructure. Trying to get a regulator to understand that we're providing a service. We're not a bank as such. We're not a Revolut or number 26. Yeah. We're actually providing that service to them to allow for them to operate an embedded payments experience is a challenge, right? Because you don't fit into bucket A or bucket B. What are you, right? Yeah. Yeah.
And if you're not fitting into that bucket A or bucket B, how does the regulator know what you need to comply with? And that's
where you guys come along, right?
Yeah, that's where we come along.
exactly.
What is it that consumers want? Next year, in 5 years' time, perhaps they don't even know. And how is FinTech responding?
Well, the question that I've been being asked a lot with regards to consumer is like wallets, like, you know, what they want to use, like, you know, in order to pay and all that. I think what consumer want is what they used to actually use. Sounds super cliche, but that's actually like something that is quite difficult for merchants to actually like, you know, put in place. Relevance at the point of checkout is mission critical, right? I think all of us here in the room, we understand payments, right? We're well educated, we probably use Apple Pay and all these type of things, right? But imagine if you arrive on a checkout and you see like, you know, a wall of payment methods, right? And you see like, you know, things which are you completely like unaware of, like you know, Ideal in the Netherlands or Venmo in the US, or suddenly you see like pay with crypto. Like that's actually going to impact the user experience, right? It's going to
overwhelming. Yeah,
yeah, it's quite overwhelming. And payments is all about trust. But that's why PayPal, you know, has been so successful. You know the PayPal brand, you know you're going to use PayPal, right? So the consumer want to actually see what they used to actually use, like across like, you know, the commerce world, and they want to have like a slick and easy experience, right? Again, pretty basic, but that's the reality of things, right? The moment you have a point of friction, like boom, like you're going to lose the customer. If you're in an industry which is like, you know, hyper competitive, like, you know, switching cost is low, you're going to go somewhere else to buy your product. That's something that you see in mobility, for example. If we go in the street right now, you see a Lime bike and a Forest bike and a Tier bike, you try to pay. If one fails, boom, you're going to go to another one, right? That's pretty much what's happening.
What do you put it under speed? Is it just, do you want to
I
check
think
it at speed?
you have speed, you have the overall user experience, redirect, like you have to sort of authenticate yourself, like, you know, like several times. So there's many things like that. But on the merchant, like how do you make sure that you create relevance? Because that's the thing. You want to make sure that you're presenting the right payment method at the right time to the right user, depending on the right profile. And that's like where you have a lot of complexity, right? You may actually realize that some of your users may want to pay with crypto for like a very specific good that you're actually selling, right? But if you show crypto to everyone, it's going to impact your user experience. So that's essentially what you have to navigate as a merchant to make sure that you're providing relevant speed and convenience at the point of checkout.
Can the merchant actually do that? Can the merchant
Can the merchant do? Well, I guess like, you know, there's a certain platform out there that can help do that. But it's actually, they're all trying to do that. For now, I think most of the merchants have been doing things through the lens of like locality, right? Oh, I'm just going to present like a payment method based on where you are. Yeah. But that's not enough. It's like literally like probably the first step, but then you need to go like 3, 4, 5 level, like, you know, down, like risk profile, demographic, type of goods. For example, you're not allowed to show like, you know, PayPal if, you know, if the good is actually like, you know, from a sanctioned market. Maybe you're a marketplace and you're trying to sell like something that, you know, is being produced in the market that, you know, is sanctioned by, is on the sanction list, right? You're not allowed to show PayPal, for example. So how do you do that? So there's a lot of like, you know, complexity with regards to creating what we call like a fully dynamic checkout or dynamic presentment. And that's essentially like, you know, what merchants have to navigate today.
Kirk, how about your perspective on what we, the customer, want and how FinTech's going to respond?
I think the customer just ultimately wants convenience, right? Bottom line, right? You know, we can glorify this and dolly it up all we like, but at the end of the day, they want to get to a point of checkout after they've made their decision and get out of there as quickly as possible, knowing that, you know, if they've taken the appropriate measures to actually pass the money along. That's basically, as in they're going to get their goods. And you know, Uber kind of revolutionized this idea a long time ago of, you know, feeling like you just stole a ride in a cab because you booked it, you paid for it, and then you jump out of a cab, right? And I think this notion has been around for quite some time. There's a lot of new entrants into the space where we've seen this purchase experience just really work seamlessly is at a localized level across European states. You know, that's where you see like BizClik in Poland, for example, just completely dominate the market because they truly understood the behavior of the customer and how to be able to do something, and then they start to scale elsewhere. But you know, it takes a long time for a user to change their, you know, how they want to adopt something, or like, you know.
Well, that's on that specifically, I think, you know, very valid point. Like we have yet to see the adoption of A2A. I think we're still at the very beginning of the journey of like, you know, seeing open banking being widely adopted, you know, versus like card payments. Why? Because you know,
it's inertia, right?
It's inertia, and it's also like, you know,
customers want to feel safe.
They will want to feel safe, and it's quite simple to actually use your card. You're used to it, you know
It's
how
loaded
it works.
it's loaded in
It's
the
probably
checkout.
loaded on
Yeah.
the checkout. Like, so what the incentive to actually push A2A is more on the merchant side, because actually you have lower costs, probably faster settlement in some cases.
And not always on the lower cost side as well, right? If you get to the larger enterprise side,
probably
you've got the best margins possible in card processing.
Yeah.
So, the incentives are a little bit misaligned. Yeah.
But that's a challenge if you think about it, right? So how can you ensure that you are essentially changing the user behavior, when you're actually trying to push your agenda as a merchant?
This touches on exactly what I wanted to ask. I want to take some questions, by the way, so but we're cracking on with some discussion. So do put your hands up if you wish. This weekend, I was away, and one friend refused to pay with a digital wallet because he always uses a card. I think it's safer. And in the little village where I live, there's a lady who will only issue a check because that's what she's... It's the whole question of digital inclusion. I mean, FinTech and our industries are racing ahead and developing, and that's cool, that's great, it's got to be. But there's a huge amount of people left behind. Do we care? Does it matter?
It's interesting. You say left behind, but is that how they see it?
Or perhaps refusing to adopt or not feeling able to adopt?
I mean, you've still got, on a global economic scale, you've still got 80% of the world operating in cash.
Yeah.
Right, so that's why you should all go out and buy some payment stock today. Not investment advice, but this is the way the industry is done. So again, it does come back to this idea of inertia. It's hard to remove checks from certain ecosystems. It's really impossible, right? It's how they operate. Maybe over time it will change, but if you have a preference for operating, and that's what you've done all your life and operate that way, it's hard to kind of change that mindset.
But I mean, even contactless payments, when they come out first on the card, many people wouldn't adopt them. I worked in fraud and AML previously. I was like, I'm going to ride this out for a while before I decide to start tapping my card everywhere, right? And people will wait to see if the mechanism is safe, and then they'll be more likely to adopt.
Sure. To my understanding, any questions so far that people want to put hands up? Well, I'll carry on with my chain of thought, which is I was reading that only 3 nations have so far set up central bank digital currencies. Nigeria, Jamaica, Bahamas, whereas there's 100 plus all looking at it, including the Bank of England in America, and across Asia and Europe. Is that going to be a game changer? Is that going to drive a different type of innovation? And if so, what?
I think behind it, is there some questions here? I think behind the scenes, there's a tremendous amount of value in, let's call it stable coin, or some form of mechanism, crypto behind the scenes. If you operate a business like Mangopay, we're literally moving money, thousands of transactions within seconds across multiple different platforms, and we're trying to maintain this comprehensive ledger, this document of the transaction activity. It's quite complicated. And so stablecoin, it has, and we've seen the announcement of Stripe buying Bridge this week, okay? So you can only start to extrapolate forward, what do they intend to do with that? I don't know yet. Again, actually, I'd love to get a show of hands. Who's paid with crypto in the room?
There's some. Half a dozen, perhaps, 6.
Okay,
Yep.
so less than 1% probably of the room, right? I've played with crypto. So I don't know quite yet when crypto, or if it will ever get mainstream, but behind the scenes to be able to tokenize the activity of what's happening, being able to allow for this better improved experience around cross-border transactions or FX management, currency conversion management, or rapid settlement time for the merchant. So when a Stripe does process their payment, to get that money into their wallet, the merchant gets into their wallet within seconds. There's a tremendous amount of value in that. Does it need to be front and center for everybody? I'm not quite sure, but the idea of a stable coin being able to peg against that activity, I think is super interesting.
Yeah, I think it's going to improve money movement, faster settlement, getting money out of certain markets as well. That's where I think you're going to see some level of innovation, especially with the sort of Stripe acquisition of Bridge. I mean, there's yet to be seen how they're going to use it, but I think this is going to be probably some of the benefits. Yeah.
I'm going to be the naysayer again here, given that I work in regulation, but new payment transfer mechanisms, more regulations, right? And they're going to continue to be fragmented, right? And that's one of the biggest challenges that everybody faces, right? Everybody knows that MiCA is coming out specifically for crypto. People need to comply, but most firms, when they think about this, they don't think about the existing AML and fraud regulations that are actually going to take you down, right? That's what's going to take a firm down, not MiCA, or at least not for the next 10 years or so. And it's the fragmentation of regulation. You know, I think a more joined up thought process around how you can actually begin to augment the existing rules that are in place for financial services organizations, rather than coming out with brand new directives for financial services organizations or payment service providers is probably the way to go. But again, we don't see that. It's different sets of groups for different payment transfer mechanisms, and that makes things ever more complicated for everybody in the ecosystem.
Do you think it's different though on the stable coin side of things, you know, where it's pegged, the euro is pegged against euros, or the US dollar is pegged against USDC? You know, there's a core underlying thoughtful process to...
There is,
yeah,
for sure. But
you've still got the same AML and KYC. Who's trying to perform this transaction? Right?
Exactly,
Yeah.
exactly. So that's still be in place, and then, you know, even the stable coins themselves, even though they're pegged, they will still be subject to, I would imagine, emerging crypto digital asset regulation, right? So there's an extra burden. And
even like in the US, you see like two mainstream, well not mainstream, they're far from being mainstream, but two core stable coins, right? You see the USDC and the USDT, right? One of them is even more scrutinized than the other in terms of policy. One's backed by Coinbase, it's well known, and they've got a great regulation with the regulator. The other's a little bit more kind of, you know, grey.
And having that relationship with the regulator can only help, right?
Yeah.
One of the difficulties we were talking about beforehand is about, we've got to talk about the future of payment technology, not just regulations. But it seems to be impossible to innovate and turn yourself into a global company with the huge difference in regulations around the world. You're best at perhaps describing how companies can navigate that, but also I'm just wondering if there's a perspective that you see on that, on how you overcome that.
Well, you certainly have to navigate like lots of like, you know, regulation when you're expanding internationally. I think it's, you know, how you, reality is that like regulation will impact how you sort of building your payment stack, right? So like the fragmentation of your payment stack makes it very challenging. Mm-hmm. So the way we've been like, you know, looking at things at Primer is to essentially provide like this unified infrastructure, which is very open and flexible, right? If you have to sort of make changes for each and every services you actually integrate, think how challenging that would be, right? And that was the big challenge with like PSD2 back in the days. You had to change how you would be managing like 3D Secure for each and every single services you would be using, right? So the way we've been thinking about it, like, you know, and I guess the way it should be resolved is by making some of these underlying services that would be impacted by regulation agnostic of the underlying providers. Mm-hmm. So an example is, okay, so, you know, if you have to make changes for 3DS and you actually like, you know, waiting for the underlying provider to make changes on how they actually like, you know, solve for like the regulation, right? So let's say you use PSPA and they're doing like, you know, they need to make some changes to their 3D Secure product. Well, this is going to be very complicated. But what if you have like, you know, the 3D Secure product being agnostic of the underlying services? At this point, like the only thing that needs to change is this agnostic, you know, 3D Secure protocol. And that's the way we've been thinking about it, right? So,
but you could also ask yourself, like, I mean, why shouldn't it be difficult? You know, just to play devil's advocate, why shouldn't it be difficult to move money across the world? Sure. Like fraud's on the rise, AML's on the rise, yeah? It's a treacherous market. I don't know, I think someone's been impacted probably in this room by fraud in the last 12 months. You know, so, I mean, these are there as a protection mechanisms. And maybe, you know, these companies, such as us, you know, need to dance a bit. We need to go through the process. We need to be able to strengthen our protection mechanisms to do so. I completely agree with what Gabriel's saying on the agnostic services level. I mean, we've done it ourselves inside of Mangopay. We've built an agnostic fraud prevention solution which applies different exemptions based on different markets and different conditions, right? But those exemptions are all anchored in the core regulation. You know, it's still a core part of it. I'm kind of for the side of, you know, listen, if there's somebody out there that's trying to protect the consumer, they probably put a lot more hours into it than we have as a company. And they probably see a lot more at a global level than we do. So if we need to conform to that, then we need to conform to it, you know.
So moving back to what either merchants are going to see or customers are going to see, I wonder, Gabriel, whether you're in a position to see across the spectrum and comments from others on exactly what new innovations could we see either next year or in 5 years' time that are going to be game changers? I know that's an impossible question.
Yeah,
that's why we're here.
It's a very open question. I think, you know, the one thing that we're going to see over the next like couple of years is how payments is being leveraged, right? That's the big thing, right? I do think that payments will be leveraged by not just the payments team, right? Right, you're gonna see a lot of department within the organization leveraging payments data. Payments data is there's so much value you can actually extract from payment data, right? There's so much insight you can have on your customer, their preferences, the way they behave, and there's also a notion of creating some loyalty out of payments. Now you maybe wonder what do you mean about that, right? So we've always been been buying online and trying to pay it doesn't work and things like that. You can actually drive some loyalty out of the checkout experience as well. What if tomorrow you try to pay on your favorite website, the payment is actually not going through, and boom, suddenly you receive a text saying, hey, we're sorry you couldn't pay, here's a discount code, right? This is how you can start leveraging the payment as a trigger to derive other experiences across your organization.
Is that not already being done?
It's no, it's not actually widely adopted. It's actually quite complicated if you think about it, right? You have to be able to react on the notion of payment failure
within milliseconds.
Within essentially when it happens. What you probably have been experiencing is something which is quite reactive. So at some point, you try to pay, and then a couple of hours later or days later, you have actually received a message saying, hey, we're sorry you couldn't pay, you have something in your basket. But what if, boom, you try to pay, it doesn't go through, you receive a text message. This is this notion of start to leverage payments to actually further improve the user experience. So these are things that we're going to start seeing. Obviously, I could say the sort of basic thing, you're going to see adoption of wallets and things like that. But there's a lot more fundamentals that can be done with your payment data, and that's something that we're going to see over the next couple of years.
And guys, what about corporate payments, right? I mean, we often think about retail payments when it comes to this space, but there's huge opportunity, right, for innovation in all sorts of corporate payments, but it doesn't seem to be widely adopted, right?
Yeah, again, it comes down to you're dealing with most corporate payments is run by incumbents. Yeah, large-scale companies. Obviously you can see this next generation of a digital type B2B platform emerging. But they're still quite young in what they're doing, right? So most of the large volumes, I'd argue, probably 80% of the large volumes moving across the world are run by incumbents who are using legacy systems. And we know how hard it is for incumbents to get onto new systems to be able to adopt new technologies. Okay,
very difficult.
But you're right. Over the next 5 years, I do think you'll see fundamental swapping of ERP systems and how payments are done from that basis. And faster money movement. At a B2B payments level, we all know that one of the killers of success in businesses is payment terms.
Absolutely.
Right? So being able to accelerate the payment term out there because you're using the most modern method is I think the issue that most people, and it kind of connects back to the open banking piece as well, a lot of the complexities that we find, and probably one of the major reasons why we don't see so much open banking adoption, although I know Hugh Davies is in the room here, so you can slam on me in a second, Hugh, if you want. But I don't think you see a lot of the adoption on the B2B side, particularly at a larger business level in open banking services, because this is someone who has to be custodian of the information of the corporate bank account to be able to do authentication at that level, right? And so innovation is still quite difficult at that level. Who has a corporate card? Who has access to the bank to be able to do an open banking initiation payment? Sure. And so in our space, we've done a tremendous amount in embedding wallet technology, wallet infrastructure into the corporate banking infrastructure at a B2B level, so people have funds to access, to send across that. So there's opportunities there for sure, yeah.
And earlier you touched on the AI, as you mentioned yourself, Kirk, is this wonderful buzzword that everybody uses. To what extent is that going to be a key driver, or at least a key tool within innovation? Is that the holy grail, or should we be looking at in different areas?
You have AI, you have machine learning. I think we try to we're just putting everything together all the time. I think you gotta we've actually been doing a lot of we've done a big survey recently. We interviewed 500 payments leader across US, UK, and EU. And a lot of them were actually raising use of AI at some point in the transaction life cycle, at some point in the management of payments, right? I think you're going to see AI being used to essentially drive better insight out of your payments. Eventually, we've actually we have our own ML engine at Primer, so we worked on essentially providing the ability for Primer to take over essentially the routing of your payments to sort of better optimize success rate. but like it's going to be like you're not going to have like a blanket like application of AI onto payments. There's going to be like some pieces that you can start optimizing with AI. I think when it comes to regulation, definitely one. When it comes to like faster integration on the developer side, like that's another one.
Fraud detection, of course,
fraud
is
detection,
already.
obviously, like for providers are using AI application to further improve their own product. So it's going to be like very use case specific,
Sure.
and that's what we're going to see.
I've just realised the time. I should have called for questions as we're very close to air. Any questions for our panel? Sir, there's a microphone.
I don't need a mic, I can speak.
Well, our colleagues online won't be able to hear you, sir. So, Charlie at high speed, thank you.
Thank you. Very good morning to everyone, and thank you for this panel discussion, wonderful insights. My question is on the last word here, on technology. Do you see the current technology is enough for the big, hairy, audacious goal you have for payments? I mean, is the current cloud computing enough? Do we need quantum computing in the future? Do we need algorithmic trading kind of technology in the future? Is this technology enough? Where is it?
I think there's a real appetite now from merchants. Well, I think merchants are no longer tolerating outages and downtimes and latency issues. I think that, like the larger enterprise merchants specifically, and again, I'm speaking specifically from a merchant's perspective, right? But also, I don't think consumers from our bank tolerate outages or downtimes too, right? But at a merchant level, this idea of not being able to communicate to your merchant or be able to show a roadmap to your merchant of you being able to achieve 5 nines uptime a year is a major issue, right? You're talking about minutes of downtime, seconds of downtime a year. And so I think from what I learned, and as I said at the beginning, myself and I was in the orchestration space as well with Gabriel, different company, but a point of contention was continuously point of failure. Like, are you a single point of failure in what you're offering in comparison to working with a Stripe or others, And so that SPOF, that single point of failure, is a real contention for merchants. They expect you to have multiple cloud infrastructures, expect to have a redundancy and resilience in that cloud infrastructure. They expect you to be able to respond within milliseconds to address the issues that emerge, and they won't tolerate at that larger level if you can't, okay? So absolutely, but are we there yet? Or is the notion of the larger PSPs or acquirers there? Perhaps, not all. Some of the next generation ones are just designing by default that type of infrastructure and architecture. And I think that will massively continue as well. At an underlying level on the technology side, for me, I'm kind of, because I get to see on a day-to-day basis treasury and banking operation complexity, I think there's a lot to be done on just fundamental basic intelligence around reconciliation settlement. We're moving billions of dollars a day, a week, a month, right? And if you're not able to say where that money is going to and who has that money and what your current balance of float is, that's a core regulation requirement as well, you're going to be in trouble, right? So we see fundamental, interesting new innovations happening in that space as well, just to be on top of your balance sheet effectively,
I think you have very good technology out there, but it's actually quite difficult for the merchants to leverage all these different pieces, right? And if you want to leverage them, how can you make sure that it's done cohesively, right? That's the big thing, right? If you're thinking about a single transaction, what we see is that you're going to have 5 to 6 different services being used for one single payment, right? If you have to sort of consume, integrate, manage all these services individually, that's where things get hyper complicated. Yeah. And again, to Kirk's point, what if one of these services is down? How do you actually make sure that this is not going to impact the entire transaction flow, right? So baking redundancy at the heart of the platform that you actually want to leverage as a merchant is actually super critical.
And there are no other hands up. Just one quick question, one set of quick answers, sir, and then we must wrap up. Here's the microphone.
Good morning. So globally, we don't have. Globally, we've got different regulations and compliance requirements. We've got no standardisation on language. So we use technology to relieve that pain, but are we then just creating a new problem with technology? Then that leads to new regulatory and compliance requirements because of that technology. Just your thoughts on, does this lead to madness, or is there a way out of this?
Are we not in madness already?
Yeah, it's actually like you're raising one thing. I'll let you answer, like Mike, maybe like on the regulation piece. But I think you're raising something quite interesting. If you actually like looking at your payment stack, we actually use a language analogy a lot at Primer. Like essentially, like should you actually learn to speak like 10 different languages when you're actually looking at payments, right? Like the reality is that right now you should. How is this provider works, how I'm going to integrate this API, how I'm going to use this product. Like, it doesn't make any sense, right? Payments is like a language. What if you have a universal language, right, which is agnostic of, like, you know, the regulation that can help you navigate, like, you know, the complexity? That's essentially what we are trying to solve as a company, right? And so I think, you know, technology is here to help, like, you know, navigate regulation and not creating more regulation.
I agree. And just on the proliferation of regulations for the different aspects of any payment service. I mean, there is technology that's emerging, our technology in the company that I work for, which will actually digitally read regulations and begin to do the same thing for regulations as we have done in the fraud and money laundering space, right? You don't have to sit down and examine manually every single transaction that comes through and determine whether it's fraud or not. We have rules engines, we have fraud detection systems that will do that for you and predict with a specific level of accuracy whether that's a fraudulent transaction or not. That's the path that we're following towards with regulation now, specifically with the emergence of digital regulations. So the burden is going to begin to ease as we continue to use more advanced technologies in the future. And Gen AI does have a part to play in that, specifically in the extraction and interpretation of some of those regulations to ease the burden on compliance teams. Because what we don't want to see is a proliferation of, you know, multiple different compliance teams across every organization. We want that to stay compact.
So, well, perhaps one single language across the world for payment systems is one of the futures of payment technology. Who knows, but don't hold your breath. We've run out of time. We are back here on stage 2 with embedded finance for B2B in about 25 minutes. But for now, gentlemen of the panel, Mike, Kirk and Gabriel, thank you very much indeed. I know we've only just scratched the surface, but thanks for those insights.
Thanks for having us.
Cheers.
Thank you all.